Did you know that 90% of SIP investors never actually create real wealth? If you keep doing SIP for years and years and years, it does not mean you will make a lot of wealth. More people chose to close their SIP than starting a new one. Almost 90% of the people don't know why they have invested in that mutual fund. They literally have no idea. Now, if you're interested in learning all these things from me, I'm conducting a workshop in April, 13th of April for 3 hours, where I'll teach you everything about stock market, mutual funds, macroeconomics, and how to build a great portfolio. If you're interested, the link is in the description. Click on that link and reserve your seat right now. Did you know that 90% of SIP investors never actually create real wealth? They keep investing for years and yet their portfolio barely beats inflation. And why? Because they keep doing these deadly mistakes that no one talks about. Now, if you are a SIP investor and you think it will make you a millionaire, please watch this video till the end. See, SIP is not a magic formula. It will definitely make you rich, but only if you do it the right way. So, let's begin. Let's cover 3 things in this video. The first thing would be, what are the biggest misconceptions about SIP? Then we'll talk about why most people fail at SIP. And finally, we'll talk about how to actually build wealth using investment or SIP. So let's start. So what is the biggest misconception about SIPs? SIP is equal to guaranteed wealth, and this is the biggest misconception. I think you've been watching a lot of advertisement on TV about mutual fund sahi hai, but even then you'll have to pick the right mutual fund. It is not equal to guaranteed return. If you keep doing SIP for years and years and years, it does not mean you will make a lot of wealth. It is not the reality. If you buy wrong mutual fund, which let's say has a higher expense ratio and a low return, you will barely beat inflation. You will barely create any wealth. Versus if you pick the right fund, which has a higher return and less expense ratio, you will make a lot of money. Not every fund is the same, and you will have to understand this. It is extremely important because you keep investing for a lot of years, and if you keep investing in a wrong mutual fund, it will not create wealth. And this is why it is extremely important to pick the right fund to create wealth. So this is a misconception. But why do all investors fail with SIP? Why can't they build wealth? Let's talk about what are the common mistakes people do when they do SIP. And the first biggest mistake I have noticed with a lot of people is stopping too early, and especially during a crash. Everyone, literally everyone I know, would panic whenever the market crashes. If the market crashes even by 2 or 3%, even then they feel like it is the end of the world. They would want to stop their SIP. And generally people do that. And I'm not randomly saying it, it is a reality. Check out this article. In just February 2025, the SIP stoppage ratio was 123%. More people chose to close their SIP than starting a new one. And I don't understand this behavior. When there is a 40% discount, let's say at Zara, people just line up in front of the stores and they want to just buy like crazy. But when you have the same thing, literally the same opportunity in the stock market, when the Nifty is giving you a 20% discount, people would just won't take it. They are not even ready to invest 100 rupees. In fact, they want to sell everything and go out of it. I don't understand this behavior. When there is an offer, when there is a discount, please buy more. That is a good opportunity. And all the SIP investors generally stop their SIP when the market crashes. And because of this reason, they are never able to build wealth. After this, when the market will recover and the Nifty will be again at let's say 26,000, then they'll start their SIP again. What's the point? You would not be able to make wealth if you keep following this strategy. Try to put more money when the market has crashed and not when the market has literally recovered. Now the second mistake is wrong fund selection. Now I've been doing portfolio reviews for the last 6 months and I've done close to 150 portfolio reviews, and almost 90% of the people I've talked to, they don't know why they have invested in that mutual fund. They literally have no idea. People have like 10, 15, 20 mutual funds in their portfolio, and when I ask them, why did you buy this mutual fund? They have no idea. They don't know about the expense ratio of the mutual fund. They don't know where does that mutual fund invest. They have literally no clue. They are randomly investing in a mutual fund and expecting a higher growth. See, if you keep buying random mutual funds, you would not be able to build a lot of wealth. Because if you pick, let's say, 5 good mutual funds that give you a higher return, but at the same time you pick like 5 really bad mutual funds that will destroy all your wealth. If you keep following this strategy, you would not be able to build a lot of wealth. You would have to literally think about which fund to buy. In fact, I would highly recommend do not buy more than 5-6 mutual funds. Just this is enough in your portfolio. You should have a very strong reason to buy more mutual funds. And every single fund that you pick should be picked after looking at all the parameters that you have to analyze. And I've talked about all these parameters in this playlist. If you have time, watch out this video after this video and you will understand everything about how to pick the right mutual fund. Again, a big mistake people do, buying random mutual funds on someone's advice, by looking at just past performance, which is not the right way to buy a mutual fund. Now, the third mistake is investing too little, and I myself am guilty of that. When I started with investing, in fact, I did the same mistake. For example, when we start investing in the market, we have less confidence. So let's say we started with 5,000 rupee SIP. Now, after a year, you should increase this SIP. If you have not done that, for example, your SIP was like 5,000 3 years ago and still today it is 5,000, it is a big mistake. Why? Because if you keep investing 5,000 for like 20 years, then you'll make probably 50 lakhs, not 5 crores. For example, I'll give you actual numbers. If you keep investing 10,000 every month for like 20 years, and the fund you're investing in gives you a 12% return, you will make 1 crore. But what if you keep investing every single month 10,000 and every year you step up, which is 10% increase in your SIP amount every year? Tell me how much wealth you will create in 20 years on the same mutual fund. It will be 3 crores. That's a lot of difference, and that is what you would have to understand. I'm assuming you would be increasing your salary every single year. And if that is not happening, it's a different problem altogether. You'll have to focus on upskilling, you'll have to focus on something else, because your salary must increase every single year. Because in India, we're almost at like 6-7% inflation. So your salary should at least increase by 8-10% every single year. And if that is happening, your SIP amount should also increase. That is a must-have. If you are not doing it, you will become wealthy very late. What's the point of having, let's say, 50 crores when you are 60? It's important to have more money when you are young. Only then you'll be able to explore the world, have fun with that money. Otherwise, what's the point? Let's say you are 80 and now you have 100 crores. What's the point? It's just, what would you do with that money when you're 80 years old? So please follow that. Do step up SIPs. That's very, very, very important. And finally, the fourth mistake is sticking to only SIP. Now, SIPs are great and it is very convenient. Every month, some amount gets deducted from your account automatically. So you don't have to worry about it, won't have to think about it. But when the market has crashed, when there is an opportunity, please invest in lump sum. There is no point doing a SIP when the market has crashed by, let's say, 30-40%. Now, remember COVID crash 2020 when the Nifty was trading at like 7,000. If you were doing SIP during that time, it would have hardly made any sense. But let's say during that time, you would have invested 5 lakh as lump sum during that time. Do you know how much wealth you would have created in just 3 years? Your money would have got 3x. 5 lakh turned to 15 lakh in just 3 years. And that is the power of SIP plus lump sum. When the market crashes, you should invest more money. You should not withdraw, just like which all the other people do, which is when the market crashes, they stop their SIP. You should actually put more money during the market crashes so that you build more wealth. So now let's talk about how to actually get rich using SIPs. Now the first point here is choosing the right fund. And that is the most important thing, because if you're putting a lot of money, you're doing SIP, lump sum, everything in a wrong fund, there's no point. You would just lose more money. And that is the most important thing. When you choose a mutual fund, look at a lot of parameters. If you still don't know how to analyze a mutual fund, please watch this playlist. You will understand everything about mutual funds, how to choose a right fund, understand all the parameters and then pick them. Your portfolio must be diversified across sectors, across geographies, and also across small cap, mid cap, large cap. If you have done that and you have got the right funds in your portfolio, that is step 1. Second, step up your SIP every single year. If your salary is increasing by, let's say, 10 or 15% every year, the same increase should also be done on your SIPs. It is extremely important. So for example, let's say you're doing SIP of 20,000 this year. Next year, your SIP should be at least 22,000, a 10% increase. And that is very important. And people generally forget that. Trust me, even I, in fact, when I really started, the first 4 years of my investment, I forgot this. I was doing the same amount of SIP every single year. Put a reminder on your calendar. Do something about it. Put it the last week of December or last week of March. And that is the time when you should step up your SIP. At least a 10% increase every single year should happen so that you earn your first crore early in your 20s or your 30s and not in your 60s. That is very important. Third, take advantage of market crashes. Trust me, this is extremely important. If you have the right fund in your portfolio and the market has crashed, it is a great time to invest more. It is not the time to stop your SIPs. Every single time the Nifty has crashed, I see on the news channels as if the Nifty would come to zero. It has never happened. Look at the long-term chart of Nifty or Sensex. For the last 30 years, it has always gone up. And trust me, it will again go up in the future. Again, this is my analysis. Consult your financial advisor before doing that. But I feel it will always go up. So when the market crashes, it is a great time to buy more. Do not buy stocks, because I am pretty sure you could have got like really bad stocks in your portfolio. It's really rare if you buy a fund and that will go to zero. Your stocks might go to zero. I don't know how you analyze your stocks. But if you invest in mutual funds, so lump sum investment when the market crashes in a mutual fund is great. This will actually create your alpha. If others are getting, let's say, 12% on a mutual fund, while you do SIP plus lump sum, your return would be at least 16-17% from the same mutual fund. And this is very important. It will, this 4-5% every year for a longer period can make a difference of a few crores, which is not just a few lakhs. And finally, stay invested for long term. Now, if you are investing in SIPs or mutual funds, I am assuming that you have entered it for a longer term. If you have a vision of 1 or 2 years, please do not do SIPs. Do not get into mutual funds. You should have a longer term horizon so the compounding can work. So when you are entering mutual funds, be it SIP or lump sum, please keep a horizon of 5, 10, 15 years. Only then you will create true wealth. Stay invested for a longer term, and then after, let's say, investing for 15 years, creating a huge corpus, then you can start SWP. If you don't know about SWP, watch out this video. Here I've talked about how to use SIP, lump sum and SWP together to make a great life. So what is the conclusion? Conclusion is SIPs can make you rich, but only if you do it the right way. See, it is very important to know how long you should be invested in the market, what is the amount you should invest, and then finally, where should you invest. If you do these 3 things right, trust me, you will make a lot of money in a longer term horizon. The difference between people who lose money in the market and who make a lot of money in the market is the strategy, and that is extremely important. Now, if you're interested in learning all these things from me, I'm conducting a workshop in April, 13th of April for 3 hours, where I'll teach you everything about stock market, mutual funds, macroeconomics, and how to build a great portfolio. If you're interested, the link is in the description. Click on that link and reserve your seat right now. And I'll see you next week. Bye-bye.